Stephen Guilfoyle's with us. We call him Sarge, founder and president of Sarge 986. Always does a great job. He's a real nerd when it comes to the market, and I say that with love and affection and admiration because this is your thing. I mean, you are so fully immersed in these markets. I mean, what's your market thought?
My market thought is that valuations have to go higher because of what the ECB is signaling, because of where we think the Fed is going. I believe that currencies around the world will probably be debased. We're going to have to defend our currency to the downside, not to the upside. And I do believe that valuations have to go higher. So even though we're going through right now a somewhat negative earnings season, although it's better than expected, it's still negative. I do think that there's upside in equities. And as bond yields become more compressed, that will become exacerbated.
Right. You know, you like Disney. And I thought that was a lot of fun. We were actually looking at some details on Disney. We had some stats about how it blew it out of the water. It's set a record in itself. And that, in fact, $7.67 billion, right, which is a record, which it surpasses even its own $7.61 billion in 2016. In addition to the fact it's the first Hollywood company to have over $5 billion overseas. It's been at highs. It's been a wonderful stock. But you like it, right?
Disney's executing wonderfully. I mean, yes, it's at all highs. It's breaking out right now, actually. I have a 170 price target. I am long the stock. I own calls, puts, you name it. So I'm protected, and I have a lot of. I've exacerbated my upside exposure. And even if it comes in, I'm fine. But it would have to come in quite a ways if I were to add to the position. But I think when they get to Disney Plus. Right now, they're building up the library with all these Disney films. That's why they're having such a big year, because they're stacking the library with content that Netflix won't get to. So what they're doing is building a tremendous library that will be on Hulu, it'll be on Disney Plus, it'll be on ESPN Plus, and they're going to bundle that at a discount.
Right.
Meanwhile, Netflix, the chief competitor, is going to be paying for all their content. They're going to have negative cash flow, while Disney can run negative cash flow in that department, but pay for it elsewhere.
So if someone owns Netflix, should they sell it now? Or on a good day?
Right now, Netflix has been rallying since it sold off on earnings. I am looking for a place to short Netflix, yes. I haven't shorted it yet, so I can't tell the people I'm out there. I've been out there a couple of times this year with mixed results, but I do believe it is a long-term short. Oh,
that's interesting. It's real, and you know, Disney's killing it at the box office right now in these past few weekends. Let's get to some of these banks. I mean, you were talking about Wells Fargo and another one. Tell us quick on the banks.
Well, U.S. Bank is a regional. They've really defended their net interest margin very well in this environment. I think you can start moving back into the banks, because if the Fed, and I have increased my exposure to banks pretty considerably in the last couple of weeks.
Really?
Oh yeah, because as everyone thinks lower interest rates, no banks, that's no good. Actually, if it normalizes the yield curve somewhat, it's a better environment for the banks.
That's what I heard.
Exactly, and since you know the Europeans aren't going to let us move the long end of the curve, the only thing we can touch is the short end of the curve. This is a technical move by the Fed. It has nothing to do with the economy. So all these guys who come out and say the economy doesn't need this, that's a first-level thinker right there. Turn them off immediately. You need to play chess. This is not checkers. You have to defend the currency, you have to defend the yield curve, and you have to understand the game that's being played. And if we normalize the yield curve, then purchasing managers will be unleashed because they won't be afraid of a recession.
Right. Oh, that's interesting. So you talked a lot about U.S. Bank Corp just now. What about Wells Fargo?
Wells Fargo, I believe.
And they've had such a PR.
Such a hard time. They finally turned the corner on deposits because they were offering interest rates they probably shouldn't be paying, but they had to. They don't have a CEO right now. It's probably undervalued because of these things. It's trading at 10 times earnings. The tangible net book's about 1.46. I think once they name a CEO, if the market likes him, it'll probably be a real positive. I think this is the one name that has some place to go. It's U.S.-centric. So I'm also long Citigroup, but you know what? Citigroup is really exposed internationally. That's a problem right now, because if you divide firms on this earnings season between those more exposed abroad and those more exposed to the U.S.-based firms are killing the international firms. It's not even close. So I'm thinking about rolling out of my Citi position, what I haven't done yet, folks, and getting into Bank of America because it's more U.S.-based.
Yeah, a lot of people like Bank of America lately. The Cloud Kings. Quick thought on the Cloud Kings.
Adobe is my long-term favorite. All the software names are all getting beat up a little bit today, but that's all right. They're not really cheap enough to buy, but keep an eye on that, because if they come in, that's what you got to do. I like Salesforce. I like the takeover of Tableau. They did the same thing with MuleSoft last year. That's a good one. I still like Zora. It's a real discounted firm right now. ServiceNow got hit in the teeth a little bit. You got to watch out for that one. But I think the space is still when they unleash CapEx.
Right.
they have to go to the cloud and they have to go to the semis. But the semis have too much international exposure.
Cloud was such like just a great positive word. People say cloud, oh, it was the best.
It's software.
Best,
right? It's the software.
Well, let's get to semis, right? You talk about Lam Research. Is that one that you like?
So many portfolio managers miss this one. That's why the whole group has been on the go. And I didn't miss it completely, but I wasn't as exposed as I would like to be. What I'm doing to try to catch up on the equipment side, because Applied Materials took off, KLA Tencor took off, Lam Research took off. I'm selling puts, 192.5 puts. I think some of them expire as soon as this week in Lam Research, so I have an exposure there. And I'm buying the one that nobody ever heard of, which I mentioned on your show, I think, a month or two ago, Brooks, BRKS. It's only about a $41 number. It's in the same business as these other more well-known firms. If they go, the ETFs are going to take this one with it, and I'm kind of reducing my net exposure by selling some puts in the Lam Research. And if I have to buy the Lam Research because the puts get put pressure in my face, hey, I'll have a nice low basis.
I understand. Okay, so wait, so Brooks you like, so someone could get that, and the Lam Research sounds difficult, like, so they shouldn't necessarily buy that one.
Well, I wouldn't buy it right here. I think it's, without looking at a computer, I think it's trading around 209, 210 right now.
Then the randoms, the places that we go to, the Kohl's stores, the CVS, these are just random opportunities.
Horrible stocks this year, horrible. These stocks are so depressed that I think there's less risk reward now if you get involved. So I'm involved in both right now. CVS, they're going to realize synergies sooner or later from the Aetna deal. All right? So if healthcare just gets out of their way, I believe CVS has an upside. It's gone sideways right here, around $50 for a long time now. I think you got a chance to the upside. Kohl's stores went through a horrible time. They have the deal with Amazon. They have a new deal with Planet Fitness. By the way, Planet Fitness is taken off on the charts right now. That's another good name. But they have deals. They have a couple deals in place. They're not attached to the mall, which is a big advantage right now for a middle to low end apparel seller right now. You don't want to be in the mall. You want to be like a Target or a Walmart where you have your own parking lot and you're your own destination. I think Kohl's is now one that you can get into, and I'm in it.
We just got some news that the Lyft chief operating officer is set to leave the company. Do you have thoughts on those? I know Lyft and Uber have a lot of short interest. They've been, the interesting IPOs, but when you hear that an executive's leaving, do you have a thought on that?
Only if I think that executive is important to the future of the operation. Like when John Ives, I think, left Apple a couple of months ago. Yeah. He was a designer of the iPhone, but not really important to switching the whole operation over to the service, more highly valued sectors.
All right, so then let's
it's not that important.
So it's down 2.5% right now. Just last thought, Beyond Meat. I'm going to talk to Sarah Roback in a moment about Beyond Meat. But do you have a quick Beyond Meat thought?
I would love to be short that stock if I had all the money in the world, but I'm afraid.
People love it. People love it. They can't get enough Beyond Meat. I don't know.
Their market cap is larger than the entire addressable market for the plant-based meat replacement industry.
Oh, it's larger than American Airlines. I mean, all right, Sarge, great to see you.
Nice to see you.
Guilfoyle, founder and president of Sarge 986. Thanks for joining us on the show.